It's now 55 and we have all our panelists, so I suggest we start. Welcome back. Welcome to the second session of the Global Trade and Blockchain Forum, which is entitled Accelerating Digitalization to Support Trade Financing. And we've already touched upon this issue in the opening session and in the first session, but in this session, we'll dive deeper into the issue of access to financing and how a DLT can facilitate access to financing, in particular for MSMEs. So we have a great panel of finance and trade finance experts involved in blockchain projects with us for this session. So I'm sure we'll have a very rich discussion. Dipesh Patel from Trade Finance Global will moderate the discussion. Dipesh is the editorial director at Trade Finance Global. He's also the host of the Trade Finance Talks podcast and Trade Finance Talks TV. Dipesh and I co-authored a couple of publications on blockchain, and we're launching a new one today. In addition to his work at Trade Finance Global, Dipesh is a strategic advisor for World of Open Account and a board member of ITFA's Emerging Leaders Committee. And he also sits on the FinTech Working Group of the Standardized Trust. So over to you, Dipesh.
Thank you very much, Emmanuel. Ambassadors, distinguished guests, ladies and gentlemen. My name is Dipesh Patel, editor at Trade Finance Global. Now, imagine how different the world might be today if, in 1976, Apple computers had not obtained the $15,000 in financing that they needed to buy the parts to fulfill their first order. How many entrepreneurial visions with the potential to change the world have fizzled out of existence due to the lack of financing? For many micro, small and medium-sized enterprises, Msmes, around the world today, access to financing can mean the difference between prosperity and bankruptcy, and working to identify, understand, and ultimately overcome the challenges that Msmes face in their quest for acquiring financing will help to ensure that the next Apple computers do not cease to exist before it has the chance to change the world. There are many challenges that have been identified as impacting MSME financing, and there is no doubt that the COVID-19 pandemic has affected the landscape. Now, digital technologies from cloud computing to application programming interfaces to the Internet of Things, artificial intelligence, and of course, distributed ledger technologies open up a whole range of new opportunities for MSMEs. New business models and new approaches to MSME financing are emerging. The technology is there, making interesting promises, yet MSMEs continue to struggle to access financing, especially trade financing. So how can we unleash the potential of these technologies? Today's panel session looks at the why and how. Why is there a challenge, and how can we accelerate digitalization to support trade financing? I'm delighted to be joined by an excellent panel. Idowu Akinde, founder of Boolean Labs Hyperledger Lead African Chapter. Mohua Banerjee, Senior Director EdgeVerve, Head of Business for Finacle Blockchain. Zul Javed, CEO of UAE Trade Connect. And Vinay Mendonca, Global Product Head of Trade Finance at HSBC. All, thank you very much and welcome. So to start off with, I'd like the panel to introduce themselves, a very quick introduction, 60 seconds or less. Who are you, where are you from, and what do you do? Idowu, let's start with you.
All right, thank you, Dipesh. Thank you, Emmanuel. Thank you, everyone. Distinguished guests, it's a pleasure to be here today. My name is Idowu Akinde. I'm from Lagos, Nigeria, and I support entrepreneurs and intrapreneurs, essentially startup founders, as well as venture teams and enterprises, to co-create venture building, to co-create technology solutions, ranging across many verticals. Some of them blockchain solutions, some of them non-blockchain solutions. Thank you very much.
Mohua, over to you.
Thanks, Dipesh. Good morning, everyone. Thanks, WTO, for this opportunity to speak about the work that we're doing at Finacle. We go by the product suite name of Finacle Blockchain. We provide solutions around trade finance, payments, identity management, and fund distribution. So today I'm going to speak about how Finacle Trade product around trade finance, is helping 15 banks in India to form their first consortium and support their challenges in trade finance and their customers to get better financing.
Vinay, over to you.
Thanks, Dipesh, and thank you, Manuel and WTO, for having me on this panel. I run the trade finance product globally at HSBC. A significant part of our agenda at HSBC Trade Finance is to digitize trade so that we can take trade finance deeper and beyond the $750 billion trade flows that we already support, so more MSMEs can access competitive financing. We want to quicken the process and make it faster and make it safer and cheaper. To that end, we've invested in different initiatives internally and in the industry, and really looking forward to talking about some of these, Dipesh, during the next few minutes.
And Zul, over to you.
Hi, Dipesh. Hi, Emmanuel. Thank you all for having us. Thanks to the WTO for hosting. My name is Zul, and I look after an initiative called UAE Trade Connect. This is a consortium of 8 of the UAE's largest and most innovative banks, along with Etisalat Digital. Etisalat, you may recognize the name as the leading telecom company in the UAE, as well as in the Middle East. And lately, we've been doing a lot in the digital space, and UAE Trade Connect is one of those innovations. We'll be talking about it in a few minutes.
Thank you very much. Also, so a huge, broad representation of financiers, technology, and also corporates from Africa, India, UAE, and also global perspective. So we'll start with a very quick panel discussion, kind of framing the problem. And I'd like to give everyone a couple of minutes each, and we'll go through their slides and short presentations on, I guess, framing the problem. Idawu, let's start with you. How can we use blockchain to empower MSMEs in developing markets? And what's your African perspective?
All right, thank you again, Dipesh. So, are the slides running? Are you running the slides? Okay, thank you. So, the African perspective is a very interesting one because, hey, traditionally the word Africa has been, almost synonymized with poverty, lack, wars, famine, and stuff like that. But I think that the world has been looking at Africa through the wrong lenses for the longest period of time, for the last few decades. Rather than taking an aid approach, perhaps a more effective approach, more efficient approach to take a trade approach. And so, Ngozi Okonjo-Iweala, you guys know her as NOI, we back home know her as Ngo, and that's an inside joke, says that, the new DG of WTO says that if you want to help Africa, really want to help Africa, then the more efficient thing to do is to trade with her. Essentially saying that aid is good, but it's a short-term band-aid, right? Trade is a better long-term solution, like a vaccine, right? Something that solves a systemic issue at the root level and has far more impact in terms of reach. Can we go to the next slide? Having said that as a background, one of the observed things is that Africa represents Africa's contribution to global trade flows over the last few decades, 45 decades, has consistently been less than 5%. And there are there's a myriad of factors that are responsible for that. Some of them we can categorize them as factors, and others we can categorize them as quality or efficiency factors. So of course, Africa has very low productive capacity. We lack the on the industrial revolution, as well as that is and I'm not gonna cover that. Also, there's a fragmented trade ecosystem being addressed by the current Africa Continental Free Trade Agreement. And then there is this point that is being championed by this particular conference, which is the inefficiency right now of trade finance, both intra and inter-trade within the continent and with other continents. And then there's unethical consumption. So if you just focus on that, which is the one with the red circle, next slide please. If you just focus on that particular item, you find that, given this data by the Africa Development Bank, you find that out of all the rejected trade finance applications by small and medium scale enterprises, a huge 42%, almost a half of them, are rejected just because of creditworthiness. However, when you think about it, creditworthiness is actually not necessarily a real creditworthiness issue. It's actually a documentation issue because again, Africa skipped on the Industrial Revolution. And so there's huge swaths of undocumented people, operations, processes, transactions that are going on all over the African continent. And so the official providers of capital, the official providers of credit are not, because there's no documentation about this huge 60% of the contributing workforce, they are not able to provide them capital. Therefore, one can fix this half of the problem. Does that mean you, again, using the Pareto principle, does that mean that you solve at least half of the problem? And the next problem there is a single obligor limit, and the next one is a balance sheet constraint. So you see that having, of course, again, going back to the point about data and documentation, we're only able to get this insight from. Can you hear me now? Is my audio good? Okay, all right. Someone said that there's a problem with the audio. All right, so you can see that we're only able to get this insight, even based on the fact that there is available data at the moment from the AFGB. So if you look on the right side of that, you see that creditworthiness is a name. There are a couple of startups, of course. And what are people doing to address these problems? Okay, so on one side, there are a couple of technology startups. Some of them, the ones highlighted here, have some blockchain implementation or some blockchain aspect to them. There are a couple of startups, a couple of technology initiatives that are trying to address this huge gap. One of them I consulted for them last week. What we do in Nigeria is that they take an alternative approach to addressing that problem. So where there's no data, right, for a lot of people, they're looking at what are the attributes of the average Nigeria and how can we extend credit to them. So take for instance, in Nigeria, owning a vehicle is very, very sentimental, and no Nigerian that owns a car wants to lose that car. So this particular startup that I consulted for last year came up with a model, an AI-based and blockchain-based model that can assess a person's financial records and use that asset, that vehicle, as a collateral, and then multiply this startup by hundreds of fintech startups that are just coming up, and you see that actually the age-old documentation, or AKA creditworthiness problem, doesn't actually have to exist at such a degree that it exists. So that's the summary of the the submission that I want to make today. But if you look on the right, there are a few startups there. PingMe is Karma Change, Afex, Binkabi, and TradeX are doing a few things on the side. And these areas where we have blank spots are essentially virgin for anybody. In fact, even if you look at the places where we have active players, there's nothing that says that there's no big player that can.
Thank you very much. Moyua, over to you. And I guess it would be interesting to hear what you guys are doing to create an ecosystem in India, Finacle Trade Connect.
Sure, Dipesh. So Finacle Trade Connect, our flagship product for trade finance on blockchain. So we started first by looking at, how do we get the banks to start adopting the blockchain technology itself, because there was a lot of apprehension when we started off in 2017. So it's a permissioned private network between banks, which first started to look at the letter of credit use case and then is now expanded to much more than that. So it's a platform which basically provides banks and various trade partners, the buyers, the sellers, the freight forwarders, the logistic providers, even to the extent that you can connect customs and ports to the solution. It's basically working as a single network, trusted, with single sharing of data on it. We also worked with our partners like TradeStream, SDocs, Visa, and Portal, which is basically powering the PCS1X, which is the port community system in India, to look at a single window for the entire trade ecosystem. So right from initiation to payment, it's a single platform for the banks and its corporate customers to look at doing trade finance transactions. Now, we started off with a bank with 500 corporates, and we're currently looking at doing USD 4 billion worth of trade on the platform itself, and then moving on to doing with about 15 banks, a consortium that's has been legalized. It's going to start operations in India, managing about 84% of the country's trade. What are we trying to do here? We are actually providing a platform which provides the banks to do all kinds of trade finance and supply chain financing instruments. So it just doesn't support letter of credit, but open account, invoice financing. If you look at the length and breadth of the instruments that are available, you could do so. As the platform processes invoices on the platform, it helps you to ensure that you're not getting into the situation of double invoice financing frauds, etc. So there are various analytics that has been built into the platform, and hence it is helping the banks to understand the capability of its SMEs as well as its corporates in terms of their payment capabilities, as well as look at more financing options that they can offer to them at various terms, and come up with various innovative business products. So banks can look at various models in which they want to go do a blockchain network. They could first start small and do it themselves with their corporates. They could open it up as a trade, as a service. Now there are many partner banks who are actually not ready to adopt or invest into the underlying DLT and the solution, etc. They're still doing the traditional way of it. The platform helps these banks to be onboarded by their ecosystem players in terms of what we call as a virtual entity onboarding, thereby supporting the adoption and bringing the ecosystem together. There are corporates who are still, struggling with paper, with their ERP systems, etc. We have a facility called assisted service, by which the bank's relationship managers can help these corporates to look at doing their trade finance request in a better way. So moving on to the next slide, which is more in terms of what we're doing around helping and supporting the SMEs and MSMEs segment of the customers, which we know is right now struggling with the financing areas, in terms of the fact that we are providing the capability on the platform and to our customers for them to offer both buyer-led financing as well as supplier-led financing. As these SMEs deal with smaller values, they are more preferred in terms of doing bulk uploads of invoices, etc. And as they provide that information, the system provides the banks to auto-finance them of request, and do the eligibility checks automatically and help these customers get better financing. So we're basically looking at supporting the ecosystem with better features in terms of digitization and using the inherent capabilities of the blockchain technology.
Thank you very much, Moira. And I guess that piece really around automated finance options with smart contracts helping $4 billion of trade is incredibly important in the Indian ecosystem. Zul, perhaps I can move over to you for an introduction to UAE Trade Connect and also the co-creation with Etisalat Digital.
Thank you very much. Just if we can move to the first slide. So UTC is a platform, and what I'm going to describe here is only the first use case. We want to deal with something tangible and manageable before we start to grow into different use cases. So the first problem that we've sought to solve is this age-old problem where banks are competing for trade finance business, but there is a possibility that those invoices are being duplicately financed. One bank may be financing what another bank has already financed. Now, assuming they were able to share data or they wanted to share data, this is what the relationship would look like. It would turn into a many-to-many relationship. And this is only for 8 banks. Add another, add another. There's more than 40 banks in the UAE. So it's an unfeasible set of data sharing. So click to the next slide and you can see why the blockchain solves all of that problem, because we're able to share data, we're able to hash data, we're able to conceal data, and yet we're able to protect the nature of the data, knowing that once something has been entered onto the blockchain, it can't be changed again. Now, in addition to that, there's another layer. If you click once, Deepesh. So we've created a central node in which we are looking at the fraud detection capabilities. And within the central node, we have a one-to-one relationship with each bank. Limited set of anonymized data is provided to us, having read the invoices that are being provided for invoice financing or for open account or for LCs. And what happens is within this central node, we have a whole layer of machine learning and artificial intelligence, which is going to get better over time at detecting, for example, whether the trade is a duplicate or whether it's a genuine trade. Do the prices make sense? If somebody is selling steel billets, does that match up with the price that was in the market for that week? So once you click through to the next slide, you can see that this is what the complete solution looks like. We have a blockchain in which data is being hashed and protected, but a limited set of data is being shared centrally with the UTC engine to protect the banks from any possible frauds. Just a quick shout out to my partners. We have 8 banks who have been really helpful in creating this because of the domain knowledge they have, the real life experience. And we have a partner, Avanza Innovations. Avanza Innovations has done several blockchain implementations in the UAE. And on the left side, you see at the Salat Digital, we are the technology provider, we're the architect, and we are the cloud provider.
Thank you very much, Zul, and we obviously included UAE Trade Connect and also Emphasis Finacle Trade Connect as well in our periodic table from the previous session. I think that piece around duplicate invoicing and multiple banks financing invoices is incredibly important, and we can go into that discussion a bit later. Vinay, I guess from more of a global overview, how can digitalization make trade finance more accessible from an HSBC bank perspective?
Thanks. So I think just 2 reflections before I go through that, from what the pandemic kind of, some learnings from the pandemic. One was across our global network of supporting multinational conglomerates and corporations and all the way to MSMEs across our network. We saw the impact of the interconnectedness and networks where the slightest disruptions had an impact across the board. This is, I think, something everybody kind of knew about. But I think there was this clear realization that across supply chains from MSMEs, SMEs, mid caps, large corporates, there was a need to build more contingency and more inventory. And I'm not saying a step back, but move a little bit away from just in time to actually creating more inventory, creating more buffer. That needs more financing. And basically what you had was a compounding of an already large trade finance gap in the MSME space being now buffered up with the need to create more inventory. So that was one reflection I wanted to share. The other was actually the rapid adoption of digitization that we will not see a reversal of. So at HSBC, 77% of our transactions came through us from our clients using digital channels. This used to be in the mid 20% range a few years ago. We don't expect to go back. But that was only the use of digital channels. What we have to now answer here is how do we take that further to allow that digitization for SMEs to access more trade finance? And here are 6 or 7 points that I wanted to put on the table and we can discuss more. Firstly, MSMEs, SMEs don't necessarily choose where they trade. They often trade on their large anchor platforms or on third-party marketplaces. It is imperative that financiers are able to embed their solutions into such marketplaces and make trade finance available where SMEs trade. And that's something we've invested in a lot in connecting ourselves through APIs to different e-commerce platforms or marketplaces to make SMEs access financing. So I think it's a good direction of travel where technology has enabled that. The second is the KYC process and onboarding of SMEs is a massive obstacle and challenge, and very limited progress, I must say, has been made in that area. And the cost of onboarding SMEs is an inhibitor in being able to get financing. On a more positive note, I think banks have been able to, driven by fintechs, been able to embrace digital decisioning. So instead of pouring on financials, historic financials, we're getting better at looking at real-time data and being able to make credit decisions faster. And that's linked to the next point. You've heard a couple of the panelists talk about more visibility, making it safer and avoiding things like double financing that are quite important, right? One of the areas around blockchain, like Mahua spoke, we've invested in Contour, which is a global LC blockchain platform. And we have seen the over 100 customers and counterparties across different markets that have used this platform actually reduce the time for them to get financing or to close their trade from 5 to 10 days to a matter of few hours. So the benefits of digitizing and using electronic bills of lading, using distributed ledger to connect the different platforms is really very real, and we've seen that happen. I think linked to that point, as more customers move to open account financing, we must be cognizant that SMEs get less access or less avenues to gain finance because many of them take finance against letters of credit. So keeping the LC relevant or digitizing it is quite important. And the final point I would say is that a lot of clients now have realized they need to think beyond their first tier of suppliers. They do realize the sustainability of their supply chain goes down to the end supplier in their ecosystem. So how is it that we can use digitization and tokenization to make sure financing is available across the ecosystem? Thanks, Dipesh.
Thank you very much, Vinay, and some really excellent points there, and also I guess kudos to your colleague Krishnan on the IC Trade Register, who really brings up some of those points on the ICC Trade Register. I guess just and now into the main panel discussion. So with all of the panelists, and Vinay, going back to you. So you've talked about it from a bank perspective, but from an MSME perspective, what are the main reasons that MSMEs are often left out when it comes to access to trade financing?
Yeah, so I think, I mean, just to add on to the points that I said, I do think the ability for them to be onboarded by financiers or banks is a critical challenge. A digital identity, firstly a digital KYC and then a digital identity to trade is a significant obstacle. Of course, we know SMEs have financials that are still evolving. So often the lack of credit history or the lack of collateral in the traditional way of lending has been a obstacle. But as we use more digital assets, we use real-time data, we use AI and algorithms, we're getting better at looking at real-time feed and trying to solve for it. We do need to solve the digital identity problem. But I think what we must focus on here is the entry barriers for an SME to adopt some of these digital solutions. It's great to say that you can do digital decisioning and data, but how can they adopt some of these digital platforms? Do they have the right legal framework they can rely on without having to appoint legal counsel every time to look through contract law, which is what we now use in the absence of legal frameworks to do digital trade? Can they have an easier way to access some of these technologies, Dipesh? Because it costs a lot to interface to some of these platforms. Are there API toolkits that literally is like a USB plug and play to join some of these platforms? And progress is being made on some of these fronts. But these would be some of the principal issues, I think, that are primarily why MSMEs are left out of that trade finance kind of catchment.
Thank you very much, and we'll save the piece on digital identities, no pressure, Oswald, for your session later on today. Mahua, are paper documents the biggest problem, and what's your perspective from Infosys side?
So if we look at the trade finance, right, from the elements of finance perspective, so if we define it as 4 stages or pillars, you'll basically categorize it as request for information, financing, payments, and risk mitigation, right? Now, each of these process and pillars, if you look at what goes behind them, there's extensive usage of paper and operational process linked to it. That directly links to the cost and time taken for you to service a financing request. Now, there's been various market research itself which shows that the hidden cost related to this excessive exchange of paper documentation and manual process is close to about 2.7 billion USD, and counterfeit trade loss itself, which is related to risk mitigation, fraud detection, etc., is close to 600 billion. Now, all of that shows that paper has become the primary source of data in trade, and hence the need for moving from paper to paperless, which is what, as a platform, we've enabled the banks to offer to their end customers, whether it's a corporate or an SME, them to create their request on the platform itself, whether it's an invoice, a purchase order. If they don't have a proper ERP system, we've enabled them with APIs to integrate so that we can pull the data directly, by virtue of which the data is available. When it's shared, it's a single source of truth. We've also built in capabilities, like for instance in India, there's e-invoicing system that's been come in, where every corporate beyond a certain value has to register them on it. So we're validating the invoices against it to ensure that it's a original invoice, no duplicate invoice capabilities have been built in on the platform itself. And the end-to-end financing request itself can happen on the platform with very minimal support required from the back-end trade systems that traditionally the banks have, where they're only referring it from a limit or the collateral perspective. So a lot of capabilities has been brought in order to see as to how do we reduce the dependency on paper, which is becoming a huge issue even after what we've seen now in the pandemic.
Thank you, and it's really interesting, India's e-invoicing solution, and a lot of potential there. And I guess we should always ask the question: if it works for India, why can't we then enroll that out into other markets, right, like the UAE, for example? Zul, has COVID-19 meant the problem has got worse, and if so, how?
I think the problem for SMEs has probably gotten worse. Having said that, the central bank here and central banks all over the world put out a lot of help and support through the banking industry to ensure that borrowers could continue to have their liquidity. And in particular, trade finance is one of the avenues that has tried to keep up and to benefit from that. So I think what probably happened was that the larger corporates, the ones with the better credit histories, have continued to enjoy funding during this time. And probably those SMEs that had credit lines from before were again able to access those and maybe even to enhance those. But the ones who maybe wanted to enter the borrowing space maybe weren't able to do that during this period. So I think COVID, for those who were excluded, would continue to exclude them. But for the ones who were in the ability to borrow and to take finance against their trades, probably the problem didn't get worse. It probably stayed about the same. Just to pick up on Mahua's point, yes, definitely paper-based documentation is one of the hurdles. And if you didn't already have an established way of getting through a digital channel into your bank, the chances of you being able to start doing that during the last 1 year were probably less.
Thanks, Zul. So we've talked about paper, we've talked about identity, and we've talked about some of the legal issues. Idowu, is there also an education and awareness gap in trade finance when it comes to being aware of the fact that these financing products even exist for MSMEs?
Well, so it's a bit of yes and no, in the sense that the need for trade finance is not lost on pretty much every MSME, that is in. However, there's obviously a need for greater education about the specific options that are available. Like the experts have spoken, from letters of credit through the more formal means, to open accounts trading, to even just good old, on invoice financing, and more recently, creative AI, artificial intelligence-driven financing options that are based on alternative ways of looking at, like I said earlier, creditworthiness. So yes, there is a lot of work that needs to be done, both by the ecosystem players like yourself, Trade Finance Global, and other organizations in the category, as well as the providers of these alternative funding options, right? To put the word out there so that the MSMEs are fully kept abreast of the options that are available.
Thank you very much. Let's talk about scale, because it's clear that there are all around the world, but let's be honest, none of them are mainstream. And actually, Vinay, I'm going to start with you. How do we scale? How do we move from POC to mass adoption?
Yeah, thanks, Dipesh. So I think, the value proposition, and to your point, I think most clients understand the clear, tangible benefits of digitizing. I think for SMEs, without a doubt, a solid legal framework and the model law on not just kind of different standards of trade harmonization and harmonizing legal frameworks, but also negotiable instruments acts being converted into electronic form are going to be critical for them to kind of come on board and be comfortable with it. So I know there's a lot of good work that's happening in this space, but with everything, because it has to be enacted, there is a fairly long time frame from it. What we're trying to do at our end, kind of to address this, Dipesh, is to have rule books around some of the platforms that we're working with on the trade side, on the documentary trade or open account side, that help customers very easily understand what are the roles, responsibilities, what are some of the terms and conditions, and they can quickly kind of be onboarded to it. So while we wait for the model law to kind of come in place and be enacted across the board, we do have to have some solutions to take strides forward. That is one. The second one I referenced to was the technology entry barrier. And this is really important, where if a customer, and we know a lot of SMEs today use cloud accounting systems, right? Oracle, NetSuite, or they're on Sage or Tally or QuickBook or Intuit. How can we get these systems to quickly connect up with some of these trade finance platforms we're talking about, right? It cannot be a significant investment required each time, but there has to be almost an API marketplace where you can go and connect it to an app and get access to some of these trade finance systems very quickly. I think we're at that cusp now, Dipesh, of investing and seeing that scale. On a more positive note, we now have customers around some of the trade finance platforms we're working on that have now gone into what we call a repeat mode. So not just doing a proof of concept or pilot, but moving their entire base of counterparties where possible onto these platforms and getting repeat flows going. So it's still really a small percentage of the overall trade, but the fact that some customers are now moving their entire flow rather than doing just one pilot is a step in the right direction.
Thank you very much, and I'm going to jump straight into the chat, and there's a whole separate webinar that seems to be going on in the chat as well. So let's bring that to life. And Mohua, I'm going to ask you this question from a statement / question from Brian Gordon. Still seems like the digital document will have issues, i.e. discrepancies. So how is this making things more efficient, and quite important when we're talking about scale here? It sounds like we're missing standards about the actual documents themselves.
It's always an interesting question. What do you focus on, adoption or standardization? I think at this point of time, with the networks that are making progress, whether it's a pull or a push mechanism, either with the support of regulators or various trade organizations globally, I think at this point of time, we're looking at more in terms of how do you make the trade processes better. The way people are looking at standardization, I would say at this point of time, people are focused about how do you leverage the EUCP standards better. It still seems to be, not something that people have started to adopt against the UCP standards itself. Once we see that, and taking the point from Vinay that, as in more these consortiums, these platforms start opening it up to various peoples to be able to use and connect via APIs, so that they are well integrated and they don't have to go after a technology investment to actually streamline some of these processes. It ensures that people are then well connected and ecosystem play is effective. So from a standardization perspective, I believe that as soon as we see that there is some of these like the ICC, DSI standards, etc., being adopted, and we see the interoperability happening between the various networks, I believe that standardization around the digital documents will also take place.
Thank you very much. I guess very important balance there between adoption and scale versus standard. I think there's another part to play here, which is partnerships. And Zul, perhaps I can ask you, given the context, can partnerships between platforms and large corporates help accelerate financing to MSMEs?
I think they certainly can. But before I answer that, I just want to pick up on the question you asked to Mahua. It's within blockchain technology, there's something called a smart contract. So actually it lends itself perfectly to getting rid of these discrepancies, because the reason discrepancies happen is because one party's data is different to another party's data. So if you actually use either the inherent blockchain where both parties are posting to the same set of data, then there isn't a discrepancy. Or if you connect through a smart contract where the validation is happening within the blockchain, then you can easily siphon out the discrepancies from 90–95% of the trades, which are matching up perfectly. So I think actually the technology, once adopted, lends itself very well to getting rid of the discrepancies and removing the human element completely. So just wanted to add that. Now coming back to your question, in the case of UTC today, the use case that we've done is where banks interface with the platform. But absolutely correct, in the future, when more and more corporates start interfacing directly with the platform, they will be putting their requests for trade finance, their invoice documents through the system, and that will lead to a wider ecosystem of users. And this at the moment might be limited to the UAE, but counterparties are in China, US, Saudi Arabia. So, there is a big question of scale that comes as soon as you start to enable corporates, or even better, when you say to corporates who have a large supply chain behind them that they should enforce the same platform or a combination of platforms, as Vinay was saying, so that everything is interoperable and everybody starts riding on the same bus.
Thank you very much. Now let's take a deeper dive into the technology, but I also appreciate that not everyone on this conference is a technologist. So let's try and take things back to the basics. And Mahua, I guess taking off your Finacle Trade Connect hat and I guess looking at a more overall approach, how actually is blockchain helping when it comes to access to trade finance, particularly for MSMEs?
Sure. So if we look at, we've discussed with a couple of financial institutions as to what have they seen in terms of, the real impact that's happening due to the pandemic to the, to their customers. And they came out with a very interesting observation. They said that during the pandemic, they noticed that whoever was able to offer better digital customer experience retained their customers. And as part of the pandemic, they saw a lot of them were restricted to offer large corporate loans and even financing to MSMEs, right? And this with, the capabilities, like for instance, in India, the regulator made certain changes to say that, the non-banking financial institutions could now start offer invoice financing to these SMEs itself. Now, with the aspect of that, the financial institutions now, both banking as well as non-banking, could offer this. So various players, the technology partners, started supporting the financial institutions to help them using either it's an AI, ML, or a blockchain. Various other technologies came into play to give these MSMEs the way, the access to get better financing. Now, if I look at the way we're doing it itself, and I'm sure there are many other players who are in some ways doing it, is that where SMEs can't find the right financial institutions, they are being brought on to a bid or marketplace, right? So the SMEs are matched to these financiers, and then they know exactly what their credentials, credit limits are, and they offer them that. Now, if they don't have any ERP systems, then they are connected via the invoice and PO systems on the platform, which is in many ways the templates, etc., created that they are industry standards itself. Now, there are auto eligibility checks that gets done on the platforms. So the financiers then look at it and offer auto financing. Many of the SMEs itself are offering their ledgers, etc., to the banks or the financial institutions, looking at which the banks itself are able to predict and say that, yes, the capability for the SMEs to pay back on the financing is much higher. And these analytics are helping them to quickly finance them. So what we've seen is that now with all of this capabilities, etc., the MSMEs are to a larger extent getting about, with the right analytics capability being showing that, their credit limits are proper, the payments are happening, they're able to get about 85 to 90%, on either invoice financing or invoice discounting, whichever they're getting offered at. And they're going faster in terms of the financing itself. So we're seeing them get a better financing now with the support of technology and the banks creating newer products around it.
Thank you. That's really helpful. Idowu, can you touch on any case studies that you're seeing in Africa around access to trade finance?
All right. So so it's quite clear. Obviously, we've spoken about the need. A few of those cases that jump out would include the Inkabi, which is a commodity exchange. Let me take it from the category approach first, and then speak about the specific players. So there are the commodity exchanges, which are solving the problem that we spoke about earlier of discovery, right? So your earlier question was about whether there is a gap between unawareness, right? And so there are these commodity exchanges that are plugging that gap, providing a marketplace, that can connect providers as well as consumers of the services. Would be the specific alternative algorithm-based finance providers, aka the one I spoke about earlier. Ping Me, Karma Chain, a few of them like that. Essentially, what they're doing, like I said earlier, is that they are taking an alternative approach to how to analyze and arrive at a credit decision concerning the MSMEs that, according to the World Bank, constitute 40% of 60% of Africa's GDP and 40% of its. So obviously, those are some of the players that are visible on the planet, and perhaps this is free public information. Perhaps perhaps there is an opportunity for more discovery / what you might call awareness / aggregation / cataloging platforms, because again, just to buttress on this question that you're asking, who are those that are active on the continent and what are they doing? That's a very big question, and it took quite a bit of research to dig them up. Thank you.
Thank you very much. And Zul, I'm going to come to you and actually with a question from the audience. Permissioned blockchains are a fine interim solution, but the eventual goal should be public, privacy-enabled blockchains, as permissioned perhaps implies barriers. How do you feel about this? And also, could you talk through in a little bit more detail about UAE Trade Connect's actual technology per your original slides in the presentation?
Okay, it's a great question. I don't know who asked it, but it is really a great question. So the UAE Trade Connect solution is based on a permissioned private blockchain. And I think Ido, being Hyperledger expert, will tell you why that has lots of advantages. The nature of the use case is what should define the nature of the blockchain. So as long as you're trying to have a closed environment, then it makes sense to have a permissioned blockchain. If you are trying to have a super open environment, then of course a non-permissioned blockchain is the right one to use. It depends what the use case is. If you are in a marketplace for finance, by definition, it needs some degree of KYC. So permissions are important. I wouldn't consider them barriers. I would say it's a means of having a kind of filter around who gets to participate and who doesn't get to participate. I wouldn't call them barriers, but I do take the point that in a fully open environment, permission blockchains aren't the right one to use. Having said that, I think we're all in the infancy of this stuff. And Vinay is involved in so many of these networks. They will grow and they will start to interconnect, and we will end up, as Mahua said, with some standards ultimately. So in effect, it will become more of an open environment over time. I think we have to start somewhere, and given that we're talking about financing, it lends itself to some permissions.
Thank you very much, Zul. So the final section, let's talk about some of the current challenges and how we move forwards. And Vinay, I'm going to start with you here, and my question is around interoperability. I mean, HSBC works with Contour with the Trade Information Network, We.Trade. Can blockchains interoperate?
Sure. Again, I'm not the technologist here, but I do believe they can. I just wanted to say one of the major use cases, the primary reasons for distributed ledger technology being used in trade finance is not so much as in the use of cryptos or the like. It's more for the fact that you have different industries, shipping, banking, customs, regulators, having to come together to work on a single software where the data is democratized, as in everybody owns their own data, right? Now, it's slightly different than kind of Bitcoin, where you have a value transfer happening for a particular currency. I am being told by the technologists that in a way does make it slightly easier to interoperate at a technology level across some of these networks. But if you look back at the different industries, right from whether that's the media or internet protocols or browsers, technology interoperability has always been solved for. The challenge is the business standards to help drive that tech interoperability. But so when I speak to my engineering teams, their answer is not, don't come to us saying solve for the tech problem. First solve for, do you have business standards, right, that allow for the standard governance of documents or the formats of documents or data attributes. So the work being done there by the ICC around the uniform rules for digital trade transactions, and I'm sure Oswald will talk about it on DSI, Digital Standards Initiative. This is going to be critical to create that foundation, Dipesh, to get the basics right around how various documents or data assets across these networks are being governed and stored. I think the technology part of bringing them together is relatively going to be an easier challenge, and certainly has been solved for in other industries when you look back.
Thanks, Vinay. And I'm going to quote you on that. Interoperability is not the problem. Business standards and standardization are what needs to be addressed. And I'm sure Oswald will cover the uniform rules for digital standards later on today. I'm going to ask a question from the chat, so open to whoever wants to answer this. Do the panelists believe that M-Letter, which is the model law on electronic transferable records, conforming digital original negotiable instruments like those being enabled by many solutions, I think they've mentioned Inigio's Trace Original here, can they help bridge the interoperability drive and help drive adoption among different stakeholders like banks, SMEs, supply chain logistics companies? Who would like to take that?
Sure. So maybe I can, and I think it refers to an earlier question as well, right? I think, Dipesh, we're never going to get straight away to the ideal end state solution where the data is completely tokenized in its perfect formats. We fully recognize that with any solution we do, whether it's on Contour or We.Trade, we have to live with a stage where there are going to be, for example, scanned image of documents that you work through, and then maybe use OCR and AI to pull the data out. So absolutely, we do believe that there will be many bridge and interim solutions that we have to support in any model we have. So on Contour, we've done purely 100% digital solutions where even the BL has been digitized fully. But then we've also done hybrids where some parts like the invoice or the packing list or certain certificates have been digitized, but the BL is still physical, but it's just been scanned through on the solution. So I entirely agree with that has going to have to be a way to drive scale. We have to have hybrid solutions.
Thank you very much. And just with regards to MLETR, I note that this will be discussed in greater detail in this afternoon session, in session 5. I guess, Mayua, I guess looking forward and taking a bit of a forward-looking view, what needs to happen?
So we're seeing that, you know, more and more it's evident that blockchain is a very right solution for for trade finance itself. If you look at, as I called out, the 4 pillars itself from a trade perspective, whether it is the request for information, whether it's the financing, whether it's fraud, all of this together, you know, if something has to be addressed for trade finance, it is basically the usage of blockchain technology. More and more of this, you know, the awareness of how it's actually helping, whether it is from a trade finance perspective or identity management perspective, where, you know, you can even look at the fact that you could onboard the corporate directly, while, you know, the current pandemic situation has led to the fact that the traditional way in which corporates interact, especially in India, where they either walk up to a branch or, you know, they have a representative who carries the documents for them. All of that is now being looked at as to how do I do this digitally. So it is becoming evident that digitization is important, and, you know, as the awareness increases within the banking organization, so that their internal approvals become faster for digitization of various processes around trade finance, and the support that they should get from regulators' perspective, whether there's changes in terms of, you know, the in terms of acceptance of the electronic versions of the paper documents, because still there are a lot of countries where regulations are yet to be amended to support the e-version of the documents itself. So the support from the government and the regulators is only going to help making this entire journey much easier and adoption much faster. So I would say that yes, those 2 areas are very important.
Thank you very much. And Zul, perhaps I'm going to come to you on this question to the panelists from James. Can governments collaborating to bring coherence to single window data sets for customs clearance help drive this standardization piece that will potentially enable blockchain interoperability?
Yes. Yeah, I mean, the short answer is yes. I think governments have a role to play. Customs authorities will probably lead the way and go talk to their governments about what should be the standards. I think technologists have a role to play. And I think the WTO, since they're our host, and the ICC definitely have a role to play, because it's these standards that will allow things to be to work together and to smoothen and shorten the trade cycle.
Thanks, Zul. So very, very conscious of time, and I want to do a very quick 3 or 4 minute wrap up. So I'd like to come to each of you, fantastic panel, to give a bit of a future looking perspective. What's your 1, 5 and 10-year view? Idowu, let's start with you.
All right, so forever the optimist, despite the huge challenges, that face the developing world, Africa especially. 1 year outlook, I'd say we'll still be in this, using Topman's model, this formative stage, quote unquote, meaning that innovators will still launch new ventures, currently launched ventures will still try to find their feet. 5 years down the line, perhaps we'll start to see a little consolidation between a few of them. At a few places where I've had the opportunity to speak, that sometimes consolidation may bring bigger benefits to each of them. So perhaps we'll see consolidation and greater stability in terms of value for the end users. In this case, the businesses, the small businesses that need access to trade finance. And in 10 years, hopefully we'll have a better image of Africa, circling back to that very first image that I painted at the beginning of my presentation, that perhaps we'll have a better image of Africa in terms of not necessarily synonymizing Africa with poverty, lack, and that kind of stuff.
Thank you. Mohiwa.
So at the end of the day, the reason why the banks and the corporates have come together is because they want to grow their business. So our immediate 1-year plan is to how do we support their growth in business. Our next term plan is basically how do we make interoperability work. And when we say interoperability, it's just not about the consortiums, but also how do people forget about the fact that the underlying DLT is a Hyperledger or Corda or whatever technology they're using. So it is end-to-end interoperability. And hopefully by then we would be able to think and focus upon standardization.
Thank you. Vinay, over to you.
Thanks, Dipesh. So just, from a look back, I think if you ask the same question from a 1 year back, 5 years, I think a lot of progress has been made in terms of learnings around the technology, around legal and handling the data, etc. So we're at a much better place. I would say in a 1 year time frame, we expect to see more customers, like we said, using repeat business flows, more SMEs accessing financing, more tech solutions coming up with API capabilities to connect to some of these platforms, but most of it's still working on a contract law or rule books. I think it'll take us to 3 to 5 years before you start seeing a completely harmonized legal framework enacted in every country and having convergence across the technology platform. Like Moa said, no one really needs to care what platform you're working on. I think in 10 years or hopefully sooner, we need to take this dialogue to how the better data, the better visibility, and the better use of digital reduces the risk in a transaction, reduces the risk premium, and the capital that is consumed towards this, because that in itself will encourage the financiers to lend more towards SME financing. And hopefully it doesn't take 10 years for that, but shorter.
Thanks, Vinay. Yeah, I couldn't agree with you more. Distinguishing good risk from bad risk is incredibly important. I'm sure Michael Vrontomitis will be talking about that later on today. Zul, over to you.
I'll start from the 10-year view. I think in 10 years, nobody will believe that we ran a trade system the way we run it today, with pieces of paper. I mean, honestly, when I started this job, I was told that there were still companies that use a fax machine to get documents validated by their counterparties. So, I mean, so I think the milestones to get there, the 5 years, definitely, I agree with both Vinay and Mahua. And 1 year from now, I'm a little less optimistic. I think people will still be fumbling around and everybody working in their silos and trying to do their little bit of technology. But over 5 years, it should coalesce. And between 5 and 10, I think the legislation changes.
Thank you very much, everyone. Idowu, Mohiwa, Zul, Vinay, fantastic panel session. Now, I ask you to stay for 5 more minutes and Emmanuel to join. It's now 1 o'clock CET, which means we are delighted, Emmanuel Gan and I are delighted to now announce the launch of our latest publication, Accelerating Trade Digitalization to Support MSME Financing. It's a joint publication by the World Trade Organization, Trade Finance Global, and the International Chamber of Commerce. This new publication, which is co-authored by Emmanuel Gan and I, dives into the benefits and deployment challenges of 8 prominent technologies that have potential to disrupt international trade and facilitate MSME financing. Digital technologies open significant opportunities to lower cost of service and facilitate MSME access to financing, but their deployment does not come without challenges. And there are several reasons that are commonly put forward to explain why MSMEs, particularly those in developing nations, struggle to obtain financing. And these reasons to our discussion earlier include greater risk profile combined with MSMEs' lack of additional collateral and of the formal documentation required for financing. There are also additional complexities for MSMEs when it comes to financing cross-border, such as lack of awareness and financing opportunities and proportionally high costs to service MSMEs. This image illustrates the complex interplay between digital technologies and demonstrates how each technology relies on the capabilities of others to deliver its most powerful benefits. Some of them work to collect and deliver data, others analyze and interpret this data, and still others provide the infrastructure which allows this communication to occur. So if we take, for example, the role of IoT, Internet of Things, in this relationship, IoT devices and sensors on their own provide pretty minimal value. However, when they're combined with the secure transmission capabilities of DLT and the analytical capabilities of big data analytics tools enabled by artificial intelligence, they are able to deliver meaningful and actionable information. To better understand the role that digital technologies play in trade financing for MSMEs, conducted a survey of 105 industry professionals and qualitative interviews with 34 industry experts. As shown by the chart on the left, each technology has been individually identified as either a lucrative challenge, a rapid reward, a small win, or a downstream ambition on the basis of the survey responses. And the positioning of these technologies within these quadrants help to depict visually where developmental efforts should be focused. The study also highlights that in light of the COVID-19 pandemic, going digital to support MSME financing is no longer optional, but necessary. And this desperate necessity for paperless workarounds has set the industry, of course, on a digital course. And on the right, we show the 8 technologies that have complex interrelations with one another and with the trade products they serve, and acknowledging that any visual depiction is likely to oversimplify these relationships. This technology stack depicts how each technological layer can be used to facilitate and enhance the layers above. The publication notes, however, that digitalization efforts are hindered by various challenges. And whilst each technology comes with its own set of challenges, there are common threads, such as the cost of deploying some of these technologies, the lack of standardized data models, the procurement of quality data, which is a particular challenge for analytical technologies, as well as issues related to data ownership and its legal admissibility in case of litigation. Another challenge faced by practitioners in the field concerns the difficulty to convince customers to share data automatically to provide relevant services, and thought should be given to the development of common framework on how to leverage data at all stages of the trade technology stack to better assess financing risk and give comfort to customers. Finally, regulatory issues are often mentioned as a challenge. Emmanuel, if you want to take over and I guess summarize some of the key conclusions from our white paper.
Yeah, thanks, Dipesh. So the publication highlights the need for a multi-pronged approach to unleash the potential of digital technologies to facilitate MSME trade financing. So first is the need for the development of globally accepted standards to remediate the problem. Second, developing a common framework for leveraging data to better assess financing risk. Third, creating an enabling regulatory framework that recognizes e-signatures and e-documents and is in line with the UNCTRAL model on electronic transfer records. And we've already discussed these issues and they will be discussed in greater detail also in session 5 today. Fourth, a strong need for a trusted global digital IT system for companies, and that will be discussed in session 4 today, so in the afternoon. And fifth, accelerated digitalization to support MSME financing requires an acceleration of efforts to bridge the digital divide, to allow all MSMEs, wherever they are, to benefit from the opportunities that digital technologies can offer. In addition, for MSMEs to take advantage of these new technologies being developed, there is a need, of course, to raise awareness about the opportunities and solutions being offered. So we note in the publication that no stakeholder has the clout to effect this change alone. Industry, governments, financial regulators, and international organizations all have a key role to play in this regard. Policymakers, technologists, practitioners, bankers, and all other stakeholders must work together to devise and agree and then execute a roadmap that will catalyze action and lay the foundation for the digitalization of trade and for the digital technologies discussed in this publication to have a potentially transformative impact on MSME financing. So the publication should now be available on the WTO, TFG, and ICC website. So I hope you will enjoy the read. session, and I would like to extend my sincere thanks to the panelists for a very rich discussion on a topic of the utmost importance for trade and in particular for small companies. So we've now all deserved a break, lunch break for those based in Europe. The event will resume in a couple of hours at 3 p.m. CET. And the first afternoon session will be dedicated to the launch of a new online course that we've developed jointly with the International Trade Center on blockchain for trade. So see you in a couple of hours. Thanks a lot.